Thank you so much, Adam. And Jeffrey Gundlach, founder and CEO of Double N Capital, thank you so much for having us here for your investor days. So I think it's best to start with your overall view of where we are in the markets. What do you make of what's transpired over the last year plus?
Well, we've had a relationship between the Fed growing its balance sheet and the value of the S&P 500 that's been in place for years now, ever since they started quantitative easing. And it's almost like a law of physics. It's like if you take the capitalization of the S&P 500 and you divide it by the Fed's balance sheet, it looks a lot like a constant. And so once the Fed started quantitative easing, that reversed the stock market's collapse from the pandemic, and they slowed it down a little bit because they were doing it at such a breakneck speed, but now they're continuing to do it. And so the stock market continues to be supported by that. So the Fed has been manipulating markets for a long time, and on top of that, obviously, we've had incredible amounts of free money, fiscal stimulus. Last month, there was another round of checks, and I don't think a lot of people are aware that about a third of last month's personal disposable income was given by the government. Also, the government is running a deficit that's about 30% of GDP in terms of their spending, and they're only paying for a little less than half of it. So there's a lot of distortions that are going on, but with the money that's flowing, it's helped to distort many economic theories and also the value of most asset classes.
Thanks for listening. We hope you enjoyed the show.